Good morning, good afternoon, good evening, wherever you are. I've made real trades with real money. I've traded 10 so far in my $1,000 portfolio challenge. This is my portfolio. Currently, I have 5 stocks. I had 5 more before, but I've sold them, a couple with some realized gain. In this video, I'm going to go over 3 stocks to determine if they're undervalued or overvalued. One of the 3 stocks I'm about to show you is overvalued by every textbook metric, and I still walked away with a profit. By the end of this video, you'll know why. The questions that we are going to cover in this video are, is Devon stock price undervalued or overvalued? Is Credo stock price undervalued or overvalued? Is VRT stock price undervalued or overvalued? We use a tool that quickly gives us the answer. No more retrieving financial numbers from past financial reports, no more manual calculations. It's the quick way in this modern era. We simply use Simply Wall Street. Let's go over the first stock, which is Devon Energy. Okay, this is Devon Energy. It's an independent energy company, engages in the exploration, development, and production of oil, natural gas, and natural gas liquids in the United States. And its industry is oil and gas. Okay, now let's go to the valuation. The current price of Devon Energy is $48. And according to Simply Wall Street Analysis, the fair value of the stock is $158. So it's considered 69% undervalued by Simply Wall Street. And the second thing that we want to look at is by comparing the stock with its peer. Devon Energy, currently its PE ratio is 16.4, and the average of the peer is 18.2, so it is slightly cheaper than its peer. Now, look at the PE ratio against the industry. Devon is 16.9 as compared to the industry average of 13. So Devon is comparably expensive when compared to its industry. To get the overall value, we can check the Snowflake for valuation, and Simply Wall Street's score on valuation is 5 out of 6, which is good. So it's considered a good buy from price perspective, and it is also good in terms of its financial health. So overall, it's a good buy. I own it in my $1,000 portfolio. You can check out my video when I actually bought the stock. And as of this time, which is end of August 2026, it currently has an unrealized gain of 7%. Now the second stock is Credo. Okay, Credo Technology. It provides various high-speed connectivity solutions for optical and electrical Ethernet and PCIe applications in the United States, Taiwan, mainland China, Hong Kong, and other international markets. It belongs to the semiconductor industry. Let's check out the valuation. The first one is the share price versus fair value. Currently, its price is $222, and according to Simply Wall Street, its fair value is $162, so it is considered 37.3% overvalued at this time. If we compare it with its peers, Credo's price to earnings ratio is 89 times, whereas its peer average is 77.4 times. And so it is slightly more expensive than its peer. And if we check the price to earnings ratio versus its industry, Credo is 87.9 times, whereas the industry average is 45.1 times. So Credo is considered expensive based on its price to earnings ratio compared to its industry average. Now we look at the Snowflake score. The score for valuation is 0 out of 6. It's considered expensive by simply Wall Street. So on paper, this is a stock to avoid. But this is the one that I bought and I made a realized gain from it. So from valuation alone, I would not buy it. But look at the future growth and the financial health. Both of them are 6 out of 6. Valuation alone cannot be the deciding factor. In fact, I bought this on 27th of July at $201, kept it for 16 days, sold it off at $264 with a realized gain of 30%. It's expensive, but the future growth is promising, so the price gets pushed up by company performance and the market perception on the company's potentials. Valuation is one piece of the puzzle, not the whole picture. That's exactly why I put a small slice of the portfolio behind any single pick. Stock picking has real excitement to it, but also real luck, and you never want to lose sleep over one position. Now, let's look into the third stock, which is VRT, which is Vertiv Holdings. And what is Vertiv Holdings? It designs, manufactures, and services critical digital infrastructure technologies and life cycle services for data centers, communication networks, and commercial and industrial environments in the Americas, the Asia Pacific, Europe, the Middle East, and Africa. It belongs to the electrical equipment and parts industry. Now let's look at the valuation. First, the share price versus fair value. Its current price is $254 and its fair value is $265 according to Simply Wall Street. So it is considered below future cash flow value. Now let's check it against its peers. The price to earnings ratio of Vertiv is currently 56.8 and its peer average is 37.5. So Vertiv is more expensive if compared to its peer. Now look at the comparison with its industry. Vertiv is 56.7, whereas the industry average is 34.7. It is also expensive based on its PE ratio as compared to its industry. Now look at the overall valuation according to Simply Wall Street. It is scored 3 out of 6, so it's not considered undervalued, but you may consider buying it because when comparing it against its peer, it's expensive, and when you compare it with its industry, it's also deemed expensive. However, from Simply Wall Street analysis, it is still considered slightly undervalued. Let's look at other factors. The future growth is 5 out of 6, and the financial health is 6 out of 6. So both of those factors are really good in the analysis. So this is something that we may consider buying. In fact, I still own Vertiv. I bought it on the 3rd of August, and it has a small unrealized gain. My price target for VRT is $301. That is the target price put up by a Goldman Sachs analyst. Well, at this stage, we don't know whether it's going to reach its target. But anyway, in my portfolio, I bought $100 worth from the $1,000 value that I put in the total portfolio. So currently I have 5 stocks that they are worth around $500, and I still have $500 of my cash to be invested in 5 more stocks. So in summary, Devon Energy is undervalued, Credo is overvalued, and VRT is more or less at the right price. Always keep in mind, your buying decision should be based on the overall analysis of the stocks, not on the price valuation alone. Quick reminder, everything here is for education and entertainment, not financial advice. This is my own real money experiment. I'm not a licensed advisor. Do your own research or talk to one before you invest. If this helped, hit like and subscribe for the next pick.